This will be recorded, so we can drop it on our website to help everyone. But Lauren, Fran, take it away.
Great, thank you, Jennifer, so much. I am Lauren Port, and I am joined by Fran San Diego. I am a business development manager for PBO Advisory Group based out of San Diego, California. I am living in Boise now, and this has been such a great opportunity. I just wanted to thank everybody. I met Jennifer through Fair, Idaho, and now I'm seeing all of these businesses that are part of the Downtown Boise Association, and I recognize so many of them because we're really trying to get to know our neighborhood and the restaurants and providers and services all throughout downtown Boise, and I just love it. So I'm really excited to get to do this, and I loved making this PowerPoint presentation because I got to find all of these places that I recognize and cut and paste onto here. So anyway, welcome. We are here to talk about PPP, the Employee Retention Tax Credit, all those things that probably make everyone's eyes cross. But there are definitely ways to get cash into your business. And so Fran and I are going to touch on those. And as some of you may know, that there are some things were just approved yesterday. And so I tried to do some updates. We're learning more as every day goes by. And so we'll have updates, but I wanted to let you know a little bit about PBO Advisory Group. We are a group of finance and HR professionals. We provide outsourced accounting and HR and business advisory services throughout companies through California and across the United States. We've been really helping many organizations with PPP and Ertc funding this year. As this says, we've completed over 50 PPP applications and forgiveness applications. We're working on 60 Ertc studies that include 20 or more than 20 now with food and beverage clients. We also do a lot of breweries, wineries, salons, you name it. Anyone that we can help qualify, we do. We've secured over 20 million in additional funds for these companies between the PPP and Ertc. And we are here to help you better understand it and help you through the process if you would like. So let me just give you a little bit about what we're going to talk about. We're going to talk about PPP rounds 1 and 2, the CARES Act tax credit, the Consolidation Appropriations Act, which are the two different groups of funding that came available. There is the 2021 Employee Retention Credit Extension, which just came about yesterday. See if your business qualifies. We'll show you how you do that and the next steps that you take to get cash into your business. And so I will let Fran talk about get this started with PPP.
Hi, everybody. Thanks for taking the time to spend with us. We're hoping we can give you some information that will help you with getting some more cash into your business. I know it's been really tough on businesses the last 12 months. So firstly, if you haven't received your PPP Loan 1 money, go get it. It's still available till the end of the month. And if you have received PPP loan money, file for forgiveness. But before you file for forgiveness, make sure that you could potentially be eligible for your employee retention tax credit, because the forgiveness calculation and the employee retention tax credit, there's some strategy to maximizing both the forgiveness on the PPP Loan 1 and employee retention tax credit. And then, of course, go out and get your PPP Loan 2 monies. They had closed the window for the first 2 weeks, last week in February, first week in March, for companies that were small, for companies that had 20 or more employees, but they opened that back up on the 9th. So you can go back in and apply for your PPP Loan 2. And again, make sure you do that soon. So What if you want to receive a second loan? You can get a second loan, and you can also claim your employee retention tax credit. The most important thing to understand with all of these programs is that you can't use the same wages for your forgiveness and for your employee tax credit. So we just need to make sure that we're maximizing the eligible wages for each of those applications for the retention tax credit and for the forgiveness of the PPP. Let's see. Yeah, so Payroll Protection Program Round 2. So that was part of the Consolidated Appropriations Act, which was the one that was signed at the very end of December. And it's available through the end of this month. So again, if you haven't applied, please go in there, go into your bank or talk to your bank or go into your bank portal and apply for those monies. The maximum loan for the second PPP2 loan is $10 million. You have to qualify for this one. So you've had to have had a reduction, a 25% reduction in gross receipts in 2020 compared to 2019 in a given quarter. So the IRS, or the Consolidated Appropriations Act defines gross receipts as how you file your tax returns. So if you file your tax return on an accrual basis, you want to calculate your gross receipts by quarter on an accrual basis. If you file your tax return on a cash basis, you want to calc that gross receipts reduction on a cash basis. What's really good news about the PPP loan 2 is that for restaurants, you actually get a higher multiplier. So you're eligible for a higher loan calc, which is 3.5 times your average monthly payroll in 2019. So you go back to 2019 when business was as usual pre-COVID, and you get 3.5 times your monthly payroll is the essential calculation for how much you can get in your second PPP loan 2. The other thing that was really important about the Consolidated Appropriations Act is that they added a bunch of additional expenses that could be forgiven. And for those of you who are, serving the public, anything that you had to do to be compliant with safety regulations, any kinds of cleaning supplies, any masks, PPE that you had to purchase for your employees, any changes you had to make, say you built an outdoor structure so you could serve outside, that's also forgivable expenses, as well as perishable food. So that really helps us with you guys in looking at your forgiveness and making sure that we maximize expense forgiveness while also maximizing what's possible on your employee retention tax credit. And so I just want to give you a little bit of background and kind of a timeline of how this all went down. So in 2020, there was the CARES Act, which was what triggered the first paycheck protection payroll protection program. And hopefully a lot of you got those loans. If you didn't, go get them. Secondly, in the CARES Act, the PPP was meant to help employers retain employees, and really it was more for the smaller businesses, and the employee retention tax credit was also adopted during the CARES Act, but it was only for employers who had 500 employees or more. So it was really adopted for those larger employers. What happened is that at the end of this year, when the Consolidated Appropriations Act came into place, they basically said, okay, we're going to open up the employee retention tax credit for all those folks that got PPP loans and that are under a certain threshold of employees. So what that means is that if you had 100 or less full-time employees in 2019, and you got PPP monies, you are eligible now for this employee retention tax credit. And then for the 2020 employee retention tax credit, if you have 500 or less employees, you're eligible for the employee retention tax credit in 2021, which was only Q1 and Q2 based on the Consolidated Appropriations Act that was signed in December, but the bill that was passed yesterday extended that. So now we can get employee retention payroll tax credits, which is hardcore dollars to you guys for the whole year, Q1 through Q4 of 2021.
Yes.
So with that, I'm going to send it back over to Lauren, and she's going to talk a little bit more about the details of the credit.
Yes, so this slide was made before yesterday's passing through the House of these additional funds. And so originally the CARES Act, it was qualified wages between March 12th of 2020 up until January 1st of 2021. And then the stimulus bill from December qualified the wages between March 2020 and before July 1st, 21. But now with this new passing, just like Fran said, that it's going to go through Q3 and Q4 of 2021 as well. So the way this works is for 2020, you get 50% of qualified wages plus healthcare costs, and the maximum is $5,000 per employee for 2020. So as long as you have an employee that makes at least $10,000 for the quarter, which is equates to $40,000 a year, you can get the maximum $5,000 per employee. And then for 2021, it jumped up and it's 70% or $7,000 for Q1, Q2, and now it's Q3 and Q4 as well. So that's $7,000 per employee per quarter. So we're talking about $28,000 for the entire year of credits per employee. So I think I just repeated myself again, but anyway, I'll say it again. It's $5,000 times for each employee for 2020. And then for 2021, it's $7,000. And so originally it was $19,000 and now it's up to $25,000 per employee between 2020 and 2021. And so here's an example. Say you have an employee that earned $12,000 in one quarter. The maximum amount is $10,000. So you multiply that by the 50% and it's 5,000. So if you have 10 employees with qualifying quarterly wages, then you would get a $50,000 credit, and that's for 2020. So for 2021, you would get, if you had the same 10 employees that had those qualifying wages, that would be yes, possibly $280,000 through Q4 of 2021. So the way that this works is it's monetized by taking a credit on your 941 payroll tax return. And so you can either request a refund back or reduce your federal tax deposits by asking for a credit. So if you have a credit on your 941, you would then be able to not pay. You would keep applying those credits until they were used up. So you would not have to remit money out of your pocket. So there's two different ways to monetize that. Let's see. I think I'm turning it over to Fran for the eligibility requirements.
Yeah, so the first thing that we would encourage you all to do on the employee retention tax credit is do your quarterly gross receipts of 2020 and compare it against 2019 and see if you had a 50% reduction in gross receipts in 2020. If you had a 50% reduction, you're automatically eligible for this employee retention tax credit. If not, Then we look at whether your business was impacted by any sort of government shutdown, which we have a database that we can check against to say, okay, most of what you guys are doing, if you're serving the public, was impacted in some way or another. So that's for the fourth quarter of 2020's employee retention tax credit. In the 2021 reductions, you're looking for a gross receipt reduction of 20% or more against 2019 again. So the other thing that's important to understand is you can actually right now get a really good sense of if you're eligible for your first quarter of 2021, and you can work with your payroll companies now to actually claim that credit before you file your 941 for first quarter. So there's a lot going on because you can apply for a credit for your fourth quarter of 2020, but you can also claim a credit in first quarter of 2021 now that we're at the end of first quarter almost. So there's a lot of opportunity right now for you guys to run your calcs, look at your payroll, and see if we can work with your payroll company to claim these credits right away. What we're seeing with the fourth quarter credits is that some folks are choosing to, like Lauren said, file the 941X and claim the credit with their payroll companies. Other folks are filing the 941X and asking for a refund check, which you can also do. But you're at the mercy of the IRS and when they'll be able to process that. And so we're seeing, 12 weeks out, but we think that that is going to get longer as people start to take advantage of these programs. So what is the difference for eligibility? I kind of mentioned this earlier. So in 2020, your 2020 tax credit, your company had to have 100 or less full-time employees in 2019. And that's full-time employees. So a lot of you folks may have part-time employees. The definition of a part-time employee in this particular situation is that an employee is averaging 30 hours or less in any given work week. And then in 2021, the threshold for the definition of a size of a large employee or small employer changes. So you just have to have 500 or fewer employees, and that allows you to be eligible for the employee retention tax credit for all of 2021. Something to note, which is important for some of you folks that have restaurant groups, is that if you've got common ownership, meaning if a restaurant is owned 50% or more by the same entity, we have to consolidate all those employees into the calculation. So that's important to know. We're doing a lot of restaurant groups right now and having to consolidate multiple restaurants to be able to do the calcs. So just a point of note. So how do we claim this Ertc? So the first thing we do for the 2020 credit is that we file the payroll 941X, which is your amended payroll return. And like Lauren said, we work with our payroll companies for the most part, or we can do it if your payroll company does not do it. But your payroll company should be able to help do that, just depending on who it is. And we have instructions depending on which payroll company you're working with. And then once you claim that refund, you can either choose to have a check sent back to you, or you can claim it in your payroll processing system so that you don't have to pay those federal payroll taxes as you're processing payroll today. So then in 2021, same situation, except for now we know we can run calcs now, and if we can get with your payroll company before you file your 941 for Q1, we can claim those credits immediately rather than having to do an amended return. So what we want to be doing is doing these calcs in the next week or so and with your payroll company and saying, I would like to claim my employee retention tax credit. Tell me how I can do that. And they hopefully they can walk you through it. So I'm going to hand it back over to Lauren, and she's going to kind of talk you through the steps of how to get this done.
Thanks, Fran. So yes, so the first thing that you need to do is see if you qualify with one or the other test. The gross receipts test, which for 2020, as we said, is a 50% gross receipts reduction versus 2019. So your normal business operations are assumed in 2019. You compare it by quarter to 2020 and see if you meet that 50% or more loss in gross receipts. And then, like I said, for 2021, it drops from 50% reduction in receipts to 20% in 2021. And if you don't, some companies were able to pivot and make money in other ways, but still were impacted by the shutdown. And so if you don't meet that gross receipts test, you then can go and see if and when the business was partially or fully suspended by the government orders. And this test is very broad. And what we have been doing is creating a timeline of how the business was impacted, whether it was specific service line revenue that was lost, if you had to close your doors to service your customers or weren't able to, if you had to just go to online ordering instead of in person, that type of thing will qualify you. And so I'm going to give you just a little brief overview of what a gross receipts test looks like. So this is an example of a Boise establishment. So if you had $100,000 in Q1 of 2019 and did the same in 2020, you have no change. So you would not qualify in that quarter. In quarter two, when things really started happening, say you started out with 125,000 for that quarter in 2019, and then in 2020, you drop down to 85,000. That's 32%. Still doesn't qualify you, but Q3, when things really got tightened, you dropped from 150,000 in 2019 to 70,000. That's a 53% reduction. And then as you can see in Q4, it's a 57% reduction. And then as we said, 2021, that requirement drops to 20%. So if you had $70,000 compared to 100 in Q1 of 2019, you've got a 30% reduction. So 30 and 40%, as you can see, would qualify you for this credit. So here are our key takeaways. You can get both the employee retention tax credit and PPP2 and PPP1. For the ERTC qualification, you determine your change in gross receipts by comparing those calendar quarterly amounts from 2019 to 2020 and 2019 to 2021. If you don't meet that criteria, you do a facts and circumstances analysis, which could include a timeline showing how you qualify based on the governmental order impact. And then we do a detailed payroll analysis to determine what wages are eligible for the ERTC, which you need to subtract out any wages that were used for PPP forgiveness. And like we said, planning's critical. If you're getting PPP2, you want to be able to maximize both of these, the payroll protection funding as well as the ERTC. So we can help with all of that, and I'm happy to do so. I just wanted to talk real quickly about the restaurants relief bill that was approved last night. And so I'll just highlight some of the things that go along with that. That was a $28 billion relief broken down into maximum $10 million government funded grants per restaurant group and $5 million per location. And it retroactively covers expenses incurred from February 15th of 2020 all the way up until the end of 2021. And you can still qualify if you've received payroll protection and the ERTC. And then any amount of relief has these funds backed out of it. And so restaurants that opened in 2018 or earlier It's your average 2019 revenues, monthly revenues times 12, minus your average monthly 2020 revenues, and then minus any PPP loans. And then restaurants in 2019, it's the same as above. And then even restaurants that opened in 2020 can be eligible. And it's just based on eligible expenses less any PPP loans. The great thing, this is what I love, these grants can be spent on payroll and benefits up to $100,000 a year, mortgage, rent, utilities, maintenance, supplies, including the PPE and cleaning products, food and beverages, supplier costs, operational expenses, and paid sick leave. So this is a great thing, and we're happy to be able to help everyone sort of navigate through all of this. So I'm really excited that that passed yesterday. Turn it over to Fran for Q&A.
Yeah, and thank you, Lauren. And so I wanted to mention, you know, like Lauren said, the Restaurant Relief Act just passed last night. So we will, you know, send out more information as we have it and find out how we can get you access to those dollars as soon as possible. What we know about the Restaurant Relief Act is the same thing we know about PPP loan and employer retention tax credit, is that we just can't use the same wages for any of the funding sources. So we just need to be smart about our expenses for forgiveness and our wages for tax credit to be able to maximize all of those monies. Does anybody have any questions?
Yes, please ask away.
Yeah.
Help with any questions that you have about this.
So there's a question in the chat, is there a minimum number of employees to get the ERTC? No, there is not. You can have one employee. Or I believe that you can even be a sole proprietor and get some monies there. As long as you're running payroll, you have to be running payroll. And what PBO Advisory Group is doing with our clients right now is that we are, you know, we'll qualify you to see if you're eligible for the employee retention tax credit. And then what we're offering to our clients is that we will do the calcs on the employee retention tax credit and also help you apply for forgiveness if you have not, so that you maximize both. And we won't charge you for our time. We'll just charge you a percentage of whatever we can get for you, so that there's no dollars out of pocket for you right out of the box, because we know you're all trying to manage cash flow. And so we will try and get you those monies, and then you don't have to pay us until you get your money. Any more questions? Well, and I'll also say that Kelly asked a question of whether that 3.5 times multiplier is extended to tasting rooms and wine bars, and it is indeed applied to that 3.5 multiplier, which is a really nice multiplier. The rest of businesses have a 2.5. Okay, so there's another question. It says, I'm curious about the new legislation that was passed last night. If I'm understanding this correctly, we be eligible for a grant that is essentially 2019 sales minus 2020 sales, and the total difference would have PPP removed from it. Lauren, is that correct? That sounds correct.
Yes. So what you do is that you calculate an average monthly sales for 2019, multiply that by 12, and then you take your average monthly sales for 2020 multiplied by 12 and subtract that, and then you would subtract any funds that you received for PPP, and that would be the grant that you receive.
Okay. Okay. Well, that's meaningful for people. Yeah.
And Shauna, this is recorded, so you will be able to listen to this. Oh, I see Jennifer already responded to that.
There is a maximum on the grant. The restaurant relief grant maximum is, what was it?
It's $5 million per location, and I think $10 million for in total.
Yeah, $10 million per restaurant group and $5 million per restaurant location.
And I'm sorry to interrupt you. This is Shauna again.
No problem.
I appreciate it. I had guests in here, so I'm sorry, but is this all related to like the PPP employee money? Like, do we have to have employees because there's just myself and my daughter? Is that what this is? Is there anything for new businesses that started in 2020? Because we don't seem to qualify for anything.
Yes.
Do you guys run yourselves through payroll, or are you getting draws?
Draws.
Okay. So you would qualify for the restaurant relief monies, not the employee retention tax credit, because that goes against a payroll tax credit. So, but you can also get PPP money as a sole proprietor. I have helped some of my clients do that.
Well, I did apply for it, and I did get like $2,700 because I'm a new business. I'm not taking hardly anything. I can't, I'm a downtown retail boutique. But it just seems hard because it just seems like there's, nothing for us really.
Well, and we're trying to navigate through all of this new legislation that just came out, and there's little pockets of new things that they're adding. And I was trying to there's not a lot of detail out yet. And so as we learn more, I will definitely be sharing more of this with Jennifer, and she can share it to the group. We know that there's specifics for restaurants. We know there's new specifics for I forgot what I was going to say. For nonprofits, and there is PPP funds available. And so they might be changing some more of the qualifications to receive PPP. So we'll definitely keep you apprised.
Thank you.
Ladies, it looks like we missed a question kind of up above. There's just one from Jason that says, please detail the calculation for the new grant program.
Oh, why don't we go back to that slide 22.
Oops.
So you can kind of see it.
Let me see here.
It's up one. There you go. So if you see 1, 2, 3, the fourth bullet down, I think that will help. So depending on when your restaurant opens, so what you're doing is you're taking your average monthly revenue times 12, less your average monthly revenue times 12 for 2020, less any PPP monies, and that's the amount of the grant that you're eligible for. Does that make sense?
Jason, if that didn't answer your question, please let us know.
Okay.
Otherwise, there's like 3 new questions on that chat. The top one is there a maximum on the grant you just mentioned?
Yeah, so it's $5 million per restaurant location and $10 million per restaurant group. And then it says, does it matter on the month for the sales average for that calculation? We're generally much busier in summer.
So it says you take the average. So I think you're gonna have to take your 2019, all 12 months, you add those up and divide it by 12. That's your average. And then you do the same for 2020 and then subtract that. So you have to use all 12 months to come up with an average. So if you were a lot busier, in the summer of 2019, that'll make your average monthly go up. And then if things slow down significantly in 2020, you might be able to see some of that once you back that out. So, okay. So
Round 2 PPP could be calculated on gross receipts. Oh, rather than Schedule C, which would help Shauna. So, so the round 2 PPP, well, you have to be eligible, you need to have a gross receipts reduction of 25% or more in a quarter in 2020 versus 2019. So that gives you your eligibility. And then the Schedule C for Shauna would be where she could potentially get PPP loan $2, but it doesn't sound like there's a lot of dollars to be had. But we'll look.
There's really not, because I literally signed my lease in February of 2019. COVID hit in March. My build out got pushed off, but I still had to pay lease, you know what I mean? And then I opened in September, and here I am, you know, and I don't qualify for anything, you know, and we're getting killed down here in downtown Boise.
Yeah.
With everything closed. It's like we just slip through the cracks for everything. You know what I mean?
Yeah, because you didn't have you know, pre-revenue in 2019.
Right.
Right.
Although we incorporated in 19, you know, signed the lease and
had expenses.
Did a build out, a huge build out, you know, in here. It's just
they're actually, one of the other things that I saw too was that they're adding back the EIDL funds for businesses with less than 10 workers are given.
That's a good idea.
You might be able to get that.
An EIDL loan? Oh, I'm gonna write
That's brilliant. You're right, Lauren.
Yeah,
that's brilliant.
I guess I don't understand what an EIDL is. I'm writing it down though for my accountant.
So it's called the Small Business Administration Emergency Injury something.
Economic injury,
economic impact or injury. Yeah.
Disaster loan. And you can go right on the SBA website.
Okay.
And it's a loan. So it's a loan, and it's a great loan. It's a 30-year loan with a 3.75% interest rate, and you don't need to even start paying it until 18 months after funding. So it's a really good mechanism. Oh. Brilliant. That's brilliant.
It's $10,000. I know that.
Yeah, they'll give you 10 grand right when you apply, and then they'll take you through the application process, and they'll send you a promissory note for how much they think you need.
Okay.
I don't know how they come up with the calculation, but you can get a loan.
Gosh, that would be better than nothing, you know?
Right? I know. I think I read something and I jotted that down. That was just on some of the new legislation I was looking through today.
Yeah, and California has a ton of grants, and even our local has grants. I don't know about Idaho or Boise. Are there any grants coming out?
We just need to constantly look, because every state, will get allocated funds for different things, and they can decide, how those are going to be parlayed out. So I'm imagining that there's going to be some new things that's going to support a lot of other industries. And so my goal is to really keep an eye on what's happening in Idaho and be able to share that information.
That would really be great, because I applied for that Verizon, I'm a women-owned business, and that Verizon loan, but I'm sure that's just a shot in the dark,
There's constantly things coming out. So I will definitely keep my eye out on that and report back to Jennifer, or, if anyone reaches out to me specifically, we can keep in touch. And
thank you so much.
Yep. I'm trying to see how I can get.
I was going to add, there was a city small grant program. It was distributed through the city of Boise that it was kicked off last, I believe, September, October, and took place through January, but they did run out of funds for that first round in January. Doesn't mean they won't do it again, but they are currently out of funds.
Great. Well, these are all great questions, and I really hope that this has been helpful. And, you know, more to come as more information comes down the pipe with all this new funding. And we really appreciate you guys attending. And if we can answer any questions, please feel free to contact myself or Fran, either by phone or by email, and we'd be happy to help you.
Thank you, Lauren.
Thanks,
Thank you,
everybody.
Fran.
Thanks for the time. Thank you, Jennifer.
Thanks.